Good morning and welcome to TOITOI Japan Market Radio. I'm coming to you from Tokyo on April 4, 2026. This is your daily briefing on Japanese equities, currency, and rates, designed for global investors tracking Japan exposure.
Thanks for having me. Today's market summary is straightforward because Japanese markets were closed for a holiday. That means no trading in the Nikkei 225, no TOPIX movement, and no JGB sessions. However, we've got some significant policy and regulatory developments that deserve attention, particularly around the Bank of Japan and crypto-related equities.
Absolutely, and those developments carry meaningful implications even though we didn't have trading today. Let's start with the policy side, which is probably the most important story for macro investors. The International Monetary Fund has come out publicly urging the Bank of Japan to continue raising rates, and this recommendation comes at a particularly sensitive time given escalating geopolitical tensions tied to the Iran conflict. Can you walk us through what this means?
Sure. The IMF's stance here is quite significant because it essentially prioritizes Japan's domestic inflation control and policy normalization over short-term geopolitical risk. What the fund is saying is that even with the uncertainty stemming from the Iran war, which typically would make central banks more cautious, the BOJ needs to keep tightening to ensure long-term fiscal sustainability and currency stability. This validates the BOJ's hawkish pivot we've seen over the past year, but it also acknowledges there are execution risks given the fragile nature of Japan's economic recovery.
And those execution risks are not trivial, especially when you factor in commodity price volatility. The Iran situation directly impacts oil markets, which matters enormously for an energy-importing economy like Japan. How should investors be thinking about the knock-on effects across asset classes?
Let me break this down into three channels. First, for Japanese equities, this is a near-term headwind. Escalating geopolitical risk typically pressures risk sentiment broadly, and Japanese exporters with Middle East exposure face disruption risk. Layer on top of that the prospect of continued BOJ rate hikes, which put downward pressure on equity valuations, and you've got a challenging environment for the Nikkei and TOPIX in the near term. Second, on the currency side, we're likely to see modest yen strengthening. Higher BOJ rates support the unwinding of yen carry trades, and safe haven flows during geopolitical stress also favor the yen. That said, the geopolitical risk premium itself creates short-term volatility, so I wouldn't expect a smooth move. Third, JGB yields face upward pressure. The IMF endorsement of ongoing tightening reinforces market expectations that rates are heading higher, which pushes 10-year JGB yields up and likely steepens the curve.
So in essence, the IMF is telling the BOJ not to flinch despite external shocks, which has clear implications for positioning across Japanese assets. Now, shifting to a very different but equally interesting story, we need to talk about what's happening with crypto-related equities in Japan. Metaplanet, which is a cryptocurrency-focused company, is facing significant uncertainty around its planned inclusion in the TOPIX index. The Japan Exchange Group appears to be cracking down on crypto stocks. What's the background here?
This is a fascinating regulatory development. Metaplanet had been on track for TOPIX inclusion in October, which would have been a symbolic milestone for cryptocurrency legitimacy within Japan's mainstream equity markets. However, the Japan Exchange Group, or JPX, is now tightening scrutiny on crypto-related firms, and that's putting Metaplanet's index entry at risk. What makes this particularly notable is that Japan, especially after the 2017 Financial Services Agency reforms, has positioned itself as relatively crypto-friendly compared to many other major economies. This move suggests that regulatory caution may be reasserting itself.
So we're potentially seeing a recalibration of how broadly crypto businesses can be integrated into Japan's core equity benchmarks. What does this mean practically for investors who track the TOPIX or who have exposure to crypto-adjacent names in Japan?
From a direct market impact perspective, the effect on the broad indices is minimal because Metaplanet is a micro-cap stock with negligible weighting. However, the signal matters. If the JPX is willing to delay or block TOPIX inclusion for crypto-exposed firms, that introduces a new layer of regulatory risk for the entire sector. We could see some pressure on other crypto and fintech-related stocks if this regulatory uncertainty broadens. Metaplanet's own valuation could face headwinds if the entry is delayed, and more importantly, this sets a precedent that the exchange regulator is actively managing index composition and enforcing stricter standards. For yen and JGB markets, there's no direct impact because this is fundamentally a micro-cap equity issue rather than a macro concern. That said, sustained regulatory tightening on crypto could marginally reduce the yen's appeal as a funding currency for crypto ventures, though I'd consider that a second-order effect.
It's also worth noting that this isn't just a one-off headline. We've seen multiple reports on this story, with outlets like AMB Crypto and Startup Fortune covering the JPX crackdown angle specifically. It seems like there's a broader narrative forming around Japan potentially pulling back from its earlier crypto-friendly stance. Is that a fair read?
I think it's nuanced. Japan isn't abandoning its framework for crypto regulation, which remains more progressive than most G7 countries. What we're seeing is the JPX using index exclusion as a disciplinary tool, which is a specific enforcement mechanism rather than a wholesale policy reversal. However, for investors in Japan's crypto and blockchain sectors, this does dampen sentiment. The fact that the exchange is willing to take this kind of action suggests we should monitor JPX guidance on crypto listing standards closely as an indicator of evolving regulatory posture. If we see more firms facing similar scrutiny, that would signal a meaningful shift.
That's a very practical takeaway for anyone with fintech exposure in Japan. Let me pivot back to the macro picture for a moment because these two stories actually connect in an interesting way. On one hand, you have the IMF pushing the BOJ toward continued tightening, which is a vote of confidence in Japan's policy normalization. On the other hand, you have regulatory tightening in the crypto space, which is a form of risk management at the micro level. Both reflect a broader theme of Japan moving away from crisis mode policies and toward more conventional frameworks. Is that how you're thinking about it?
Exactly. Japan is in the middle of a multi-year transition from ultra-accommodation to something closer to normal monetary policy and regulatory oversight. The IMF's rate hike call is about getting interest rates back to levels that reflect actual economic conditions rather than crisis support. The JPX crypto crackdown is about ensuring that equity benchmarks maintain credibility and that firms meet robust listing standards. Both are signs of a maturing policy environment, but both also introduce near-term volatility and uncertainty because transitions are inherently messy. For global investors, the key is to recognize that Japan is no longer in the ultra-loose, anything-goes era, and positioning needs to reflect that reality.
Well said. Before we wrap up, let's recap the key themes for our listeners today. Even though markets were closed for the holiday, we had two major stories that matter for Japan positioning. First, the IMF is urging the BOJ to keep raising rates despite geopolitical risks from the Iran conflict, which has implications for equities, the yen, and JGB yields. Second, the Japan Exchange Group is tightening scrutiny on crypto-related firms, putting Metaplanet's TOPIX inclusion at risk and signaling potential regulatory recalibration. Any final thoughts?
I'd just emphasize that both stories underscore the importance of watching policy and regulatory signals in Japan right now. The macro backdrop is shifting, and that creates both risks and opportunities. For investors with Japan exposure, staying on top of BOJ communications and JPX regulatory guidance will be critical in the months ahead.
Great summary. If you're tracking Japan's markets and want daily insights like this, please consider subscribing to TOITOI Japan Market Radio. We'll be back tomorrow with the next market session. Thanks for listening.